Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
Mr. Sandman,
You get the idea?
bring me a dream.
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever
and
tasted.
tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
How will the 2024 election affect your retirement money? Well, if you're concerned about the market, your investments, or taxes, well, then this show is just for you, as I'm going to discuss today how this election could affect you. Good morning. I'm David Hollander, and this is Protect Your Assets. For those of you just joining us for the first time, welcome. People around here, yep, they call me the Sandman. That's because I want to help you sleep well at night and not worry about your money or what could happen to it. You're either working right now or you've worked all your life to save for retirement. And I just want to help you keep it, protect it. You can always ask me a question anytime something comes up. Just want to know what I would do. Email me. questions@pyaradio.com. questions@pyaradio.com. You can do that 24 hours a day. So today I'd like to discuss something, well, it seems to be on everyone's mind right now, and something everyone that we've been talking to lately is dreading, and that would be the presidential election. It's just around the corner. How could the results of the election influence the market, your investments, taxes, and what about your retirement? And most importantly, what you can do to protect it right now before things change. Well, join us for the entire show this morning as I'll share with you how the 2024 election could impact your retirement and taxes. So if you're at or nearing retirement, what should you be thinking about right now when you're reading these things? Well, we're going to talk about that in detail today, but I want to tell you this morning, you should expect more volatility. Why? Well, there's uncertainty. Also, don't fall prey to the emotional whipsaw of the financial media, especially right now, and recognize other forces are at play right now beyond the election. What you can do, which we'll talk about today in detail to help protect your assets, is take action to lock in some of the highs you've made and what you could do to reposition that while tax rates are pretty good and interest rates seem to be on their way down. Remember, the economy and markets are still responding to the highest inflation numbers that we've seen since 1981. Also, think about this. Interest rates, well, they've risen faster than any period in our modern history. Fed meets in a couple weeks. The U.S. is also involved right now in 2 wars, depending on how you count the U.S. military engagement at the border and abroad. And U.S. debt right now by household, well, it's as high as it's ever been in decades. So what can you do right now? Well, you can pay attention to the tax rates and what you can do with your financial plan, your investments, where you are right now in your portfolio, and then start thinking about the future, what your retirement is going to look like, how that income will come out of those accounts. And right now, there are some things you can do to take advantage of the options that are out there before they change. So I'm just going to ask you a question. Are you lost? Not everyone has a smooth transition into retirement, particularly right now. And if you know what I'm talking about, well, then stick with me as I'm going to help you find your way back this morning. You are listening to the Protect Your Assets show with David Hollander. That's me. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, and people around here, yep, they call me the Sandman, and that's because I want to help you sleep well at night, not worry about things like money or taxes or the election. That's right. This morning we are talking about the election and how it could affect you. We, as you know, we do run a tax, legal, and financial firm. I've been doing this for over 30 years, and when I get questions like these, well, I just want to help you figure out what you can do. And this week's question came from Sandy. She wanted to know, how is this election, this 2024 election, going to affect her retirement? So thank you for the question. And if you're just joining us, well, I'll just tell you this. I was talking about in the previous section, volatility. Yep, I think volatility will certainly be up, and I think it's going to start kicking off potentially next Friday when we get the August jobs report coming out. But also recognize that right now there are forces out there that are beyond the election, and one thing that you can do right now is take action to lock in today's historic low tax rates, and we still have pretty good interest rates out there when you talk about fixed income. And so that's what we're going to talk about this morning. And before I get started on that, well, let's have a little history lesson, shall we, about taxes. This is the kind of the history of taxes. If you go back to 1913, taxes, federal taxes, were 7%. Think about that. Wouldn't you love to pay 7%? The bracket jumped up during World War II in 1945 up to 94% at the end there. And 1981, 69%. 2021, 37%. So we all know this. We all know the government spends way more than it brings in with taxes. It is now spending, get this, more on interest on this debt than it is on the national defense. And when the government is spending too much, it can either, well, spend less money or make more. So what do they do when they need to raise revenue? You guessed it, they increase taxes and they reduce deductions. And I've been looking at a lot of the different ads and so forth, and to say that, well, this tax is only on the rich. Well, that approach to increasing taxes, introducing a tax targeted at the rich, well, after it gains acceptance, what usually happens? Well, it rolls on out to the masses. And this has a long history. Let's go back and look at some history. The federal income tax, well, I just said 1913, with ratification of the 16th Amendment, it was originally introduced as a way to make the wealthy pay their fair share. When the income tax was started, that top tax rate, think about that, federal top tax rate, 7%, it only affected 1% of workers, which today would be the equivalent of making $15 million a year. And there were 7 simple brackets. But it took only 3 years for the top rate to jump to, get this, 67% in 1917 and 21 brackets. Then it went up to 77% in 1918 with 56 brackets, with even the first of every dollar taxed at 6%. You may recall back in 1988 during the National Convention, George H.W. Bush said, "Read my lips, no new taxes," yet the very next year he signed a bill that increased taxes. And then in 1982, after reducing the top income tax rate from 70 to 50%, you may remember both Republicans and Democrats started taxing our Social Security 2 years later. And at that time, it was 50% taxable. And if you've been paying attention to the show for some time, you know now that Social Security can be, you guessed it, up to 85% taxable. That's in terms of what they start to tax you on when you spill it down to your 1040. So I say this today, you should expect, I certainly do, expect that taxes are going to be higher in your future, period. And if you believe that, then I would suggest right now, since tax rates right now aren't that significant, but in the longer term look like they could be, they could start attacking things like your retirement accounts, your Social Security, your Medicare premiums that you end up paying for, real estate that you own, manage, try and sell, or pass on to your family. Even capital gains, all these things are going to be on the table. To put it plainly, let's say you have at least $500,000 or more of investable assets and your retirement requires about $100,000 a year to maintain your lifestyle. Well, guess what? What I'm saying is $65,000 to $80,000 of that income is under attack. So the good news today is there is a preferential tax code right now. So how do you think about this? Well, you got to look at your investment assets. Why? Because right now, a lot of those, maybe you have stocks, maybe you have individual stock option plans. You certainly probably have a 401k. And if you have all those things, I would encourage you this long weekend. After all, it is Labor Day on Monday. You don't have to go back to work. Enjoy it, please. So maybe what you do is while you're sitting around doing something that you enjoy, you pull up the statement from your 401k and take a look at it. And most likely it's pretty high because the market is, like I said at the onset, we were talking about the markets. And right now the S&P 500's up 18.4% year to date. And the Dow's up over 10, and the NASDAQ's up over 18. And if you have international stuff, well, it's almost up over 10%. And if you have bonds, well, they're up over 3.3%. So it's been a pretty good year overall in terms of returns so far. So what should you do about it? Well, now might be a good time to reposition some of that. Reposition some of that into things that start to pay you when you need it in retirement. Maybe tax-free income. Maybe tax-deferred income, maybe no income tax at all. That's right, tax-free. So there's different things you can do right now while taxes are lower and interest rates are higher to get more income later. And now's the time to do that. So how do you do it? Well, we have a tool that we use. It's called a e-money plan. You might want to look at this. There's several tools out there right now on the market. One's called e-money. The other one's called Money Guide Pro. And what these do is they outline and show you what your future could look like when it comes to how you start taking money out of your various accounts. You could even include things in there like real estate. Maybe you own rental properties and you're, cash flowing those positively, hopefully. Or maybe you will in a couple years when you're retired and you've got the debt paid off and maybe some other things you did like improvements. And now those properties are cash flowing. So if you want to model all that out and then see how when you start to take, say, your RMDs, those are your required minimum distributions, from your IRAs or your 401ks, how will that start to translate into income when also now you're taking your Social Security income, or incomes plural. This week I was talking to Bernie, and Bernie, she was telling me, not Burning Man, Bernie was telling me about how she was about to turn on her Social Security, and she wanted to know, her birthday's coming up here in December, and she wanted to know, how she should do that in connection with her husband, who's a little bit younger than her, but certainly has Social Security benefits as well. So she called me and we were talking about this exact situation, which is, should she take her Social Security in December on her birthday when she turns 70? And I said, well, absolutely, and here's why. But then we started talking about the spousal benefit, and specifically her husband's benefit, and how that was going to be significantly more, and how she might want to take advantage of that when he reaches his full retirement age next year. And so we started to model that out. And that's really the power of tools like this, is you can start to simulate what the future could look like based on perceived tax rates, based on withdrawal strategies, different things that you might want to do with the money that you have, and what that would look like bottom line to your total cash flow. And you can even do things like, well, how much money can I actually pull out of that? Maybe even more than you thought. So with the news that you can do something about this right now, well, what can you do? Now's the time to make tax minimization moves on your retirement accounts while tax rates are at all-time lows. You know that they're going to change. In fact, the law is going to extinguish at the end of 2026. So it's a great time right now to do that. In addition, you can shift your after-tax accounts. These are the ones that you've already paid taxes on. Money that's just invested, say, in a trust account or at the bank, just sitting there earning nothing. Well, you can start to take that if you don't need it, or if you do need it, well, you start to take it, start to transfer it into tax-free income. This could further leverage the high interest rates we have right now. I know you don't know how to get started, right? Well, it's your money, and you need to ask yourself, is my money on the right track right now for this change that's coming? Do you know if your investments will fund your retirement for as long as you live in the most tax efficient way possible? Listen, you can get a second opinion from the guy or girl who gave you the first one, even if that's you. So get an honest second opinion during our on-track retirement review with our team here at the Liberty Group, and make sure you're on the right track with your money for your retirement. To find out right now if you're on the right path, call this number. Remember, I'm here to help protect your assets. 866-PROTECT. You will get a 15-minute complimentary coaching call where we can strategize on what you can do right now to get more out of what you already have. It's easy, it's painless, it's complimentary, and guess what? We do all the heavy lifting for you. So if you want to verify that your investments are as tax efficient as possible, you're getting as much interest as you can, I'm talking about you with all that money sitting at the bank earning nothing, call us right now. Call me and get your on-track retirement review. Call this number, 866-PROTECT. We can connect with you over the phone, 866-PROTECT. We can Zoom, or we can certainly see you in person. We'd love to see you in person. Get that second opinion right now. It's too important not to. 866-PROTECT. Again, 866-PROTECT. Coming up next on Protect Your Assets, it is time for our popular They Say segment, where we will share how our national debt may be the perfect catalyst for raising taxes, especially on, quote, the rich. And later in the show, we'll be sharing other ways the 2024 election could impact your retirement and taxes, and specifically how you can help take control of your tax bill by locking in today's historical low tax rates. There's so much more to learn. Keep it right here. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, and people around here, they call me the Sandman. You are listening to Protect Your Assets this morning. And yeah, you call me that because I want to help you protect your accounts. Think about taxes. And this week, I got a really great question. How is the election that's coming up here, just a couple months away, how is that going to affect your taxes, your legal situation, your estate planning, your financial retirement? Great questions. And if you're concerned about the presidential election, wondering how it could impact you, well, you've tuned into the right place this morning, because that's what we're talking about. We're talking about the 2024 presidential election and how that could impact you. If you want to get prepared for next year's tax bill, we do live events where we invite you to come out and have dinner with us. You get to know us. You get to ask questions. We have open forum, no time constriction. And we are doing one at Perry's in Larkspur, right there in the heart of the Redwoods. Beautiful setting, really good food, and it's all about tax minimization. So if you're trying to lower your taxes, if you want to pay less in taxes in retirement, you want to take control of that while there's still an opportunity to do that, I would encourage you to go register for that event right now. There are seats available, but when it fills up, that's it, because it's a small room, so we don't have that much more space. But you can sign up right now. Go to our website, libertygroupllc.com. Again, libertygroupllc.com. Click on the events tab, and then you'll see September 19th at 6:30 at Perry's in Larkspur. You can click the little blue button right there and register. Hope to see you there. Now it's time for one of our fan favorite parts of the show. It's our They Say segment, where we debunk common myths, half-truths, and just sometimes bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All I know is that I don't
All right, so here's one that they say. In fact, I heard it this week. They say that with our out-of-control national debt, we have no choice but to raise taxes, especially on the rich, end quote. How should we expect taxes to change as a result of this election? Well, let's talk about the scheduled, because this is right now. By the way, this is actually what the law is right now, and where it's going to go unless next year Congress does something about it and gets it done. We'll see what happens, but as of right now, this is where it is. So I don't know if you study tax rates like I do, but I'd like to look at them. 2024 tax rates. Here's what I want you to focus if you are married filing jointly. The 22% bracket, 22% bracket for 2024 is $94,301 to $201,050. It goes up to 24% federal at $201,051. That goes all the way up to $383,900. Now, why am I looking at that? Well, if you look at in 26, so remember, December 31st of 2025, currently the law is going to change. It's going to sunset. It's going to go down into the sea or into the mountains, depending on where you live, and that's it. It's over. Good night. It's going to change. If you make $250,000, well, guess what? You're going to be spending 33% on your federal tax dollars at that point, because the bracket will jump to 33% on those earning $233,351 all the way up to $416,000. You heard me right. That is a 9%. 9% increase on your federal tax rate. And it doesn't stop there. As I was talking about earlier, the standard deduction right now for married filing jointly is $29,200, and your personal exemption eliminated. That's where it is right now. Guess where it's going to go back to? Standard deductions, well, they dropped to $12,700. That's right, $29,200 down to $12,700. Personal exemption, $8,100, and that's for two people. So that's where it's currently going. That's what's targeted to happen. So how should you think about that? Well, here's what we do. I want to talk to you a little bit about some modeling that we do. We use a system. It's called e-money. You can go on the internet and you can search for e-money, and you can go look at the tool and see how it works. It involves taxes. It involves RMDs. It involves estate planning. It involves IRAs. It involves all your income, capital gains, dividends, you name it. All there. Rents from properties. All there if you want to build it that way. Well, let me just first start talking about my team. My team at the Liberty Group. We have a financial planning team. They all look at this stuff every day, and they talk about things like income flow. Where's your income coming from? Well, start looking at the tax return. See the Schedule B. Look at the Schedule C's. Let's look at the Schedule E's. Where's all the income coming from? What source is it? And then we build that into that income flow column, which you'll see on that website if you go look at it. When you click on it, the income flow column, it's in blue. It opens up income, where it's coming from, for the rest of your life. You want to live to be 85 years old, 2040. Let's say you're 69 right now, or you're going to go all the way to 95 in 2050, maybe longer. I don't know. We can start mapping that out right now. You can tell us, how long do you think you're going to live? Then we can break out straight from your tax return, straight from your statements. It can all be synced into this tool. We can start to look at where the income is coming from and how, most importantly, how will it be taxed in 2026 when rates go up and things change? Well, when that occurs, are you going to be drawing on your Social Security? If you are, what's the best way to do that if you also have income from rental properties? If you have dividends coming from the account you had over at the bank, or you had an account over at this brokerage firm or that brokerage firm. This tool is amazing because you can sync all those things together. Because think about it this way. If your future looks like 33% federal taxes, and let's call it 10% state taxes, that's 43%. Remember I was talking earlier about if you made you need $100,000 to live on? Yep. That's a lot of money. That's a lot of money that's going to go to taxes, whether you like it or not. And I'm not here to have you feel any way about anything except to know that I'm just the messenger today. This is reality. This is what's coming. These tax rates are going up. And when they go up, you're going to pay more. And you may not like it. You may not like what they do with it. And if you don't, if you want to take control of it and you want to get more back in your pocket, well, this is how you do something about it. These kind of situations are real. And you're doing yourself no favor by just sticking your head in the sand and just hoping that Tesla stock just keeps going up. It's not going to do it forever. And you can go ahead and think that when the market drops, you're going to be selling that stock off, because that's what's going to happen to force you to take that RMD, whether you want it or not. You're going to have to create that capital from that IRA to pay Uncle Sam. They want their money. And at age 73, this couple's looking at $203,622 of income from their RMD, period, end of story. How do we know that? Well, we use another tool. I'll talk about that in the next section, but we use another tool to calculate roughly the return on your investment so you can start to model these kind of things. And that's important, because then you get some clarity on your income. And in most cases, what I find is people don't need all that income. They don't spend all that income that's available to them. And once they know that it's there, then they want to know, well, what can I do with it? How else can I pass this on to my family? How do I create tax-free Roth conversions now to give my family more and not the government? Okay, I know you have that nagging question. Just about everyone feels as they get close to retiring. That wonder in the back of your mind, do we really have enough? Or will this pile of money that I've saved last as long as we need it to? Did you know that you don't actually have to wonder about that? Did you know you can test that and have that question answered? You bet it. You betcha. That's what we do here at the Liberty Group. We give people like you those answers. We help you make adjustments now while the rules are clear and straight, so you can have greater confidence, greater control later if they change things on you, so you can keep your taxes as low as possible. How do you do it? Well, you set up a 15-minute strategy session right now with my team, maybe even me, right here at the Liberty Group, where we will run simulations to get answers to your questions, not your neighbor, not your friend, you. We can customize this to you. If you want custom answers, call this number, 866-PROTECT. I'm giving a guide right now to get prepared for this election. I'll go ahead and give that to you right now for free, but you got to call me, 866-PROTECT. You can also check out our website, libertygroupllc.com. Again, if you want that guide right now, call this number, 866-PROTECT. It's time for a quick break, but please keep it tuned right here, because when we come back, I'm going to share what actions you could be taking right now to put yourself in a better financial position, regardless of who gets elected as our next president. The answers are coming up next. It always pays you to keep it tuned right here. We'll be right back.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com, where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman. And people around here, yep, they call me the Sandman. And that's because I want to help you sleep well at night and not worry about your money or losing it, because you're either working right now or you've worked all your life to save money. And I want to help you keep it, protect it. We all work together to help you put plans together that can protect your money, particularly right now with this controversial 24 presidential election. You may be wondering how it could impact you. After all, this week I got a question from Sandy saying, how will the 2024 presidential election affect my retirement, my tax bill? These are great questions. Thank you for asking. And so you probably are thinking about, well, how do I protect my retirement, or what should I do right now before the election is over? And that reminds me, if you've missed any of today's show, particularly all my tips I was giving since the beginning of the show, go check out our podcast at wherever you get your favorite podcast. Just type this in, PYA Radio. Again, PYA Radio, Protect Your Assets. That is the show. You can go to pyaradio.com. You can download it there. Or if you listen to, say, podcasts on Spotify, for instance, just type in Protect Your Assets and do the 24 presidential election, and you'll find the show. It'll be posted soon. So go check it out. Today's episode is all about the presidential election that's coming up, and mainly what you can do about it now as it relates to your retirement, your income that you want to generate in retirement, because maybe you're retiring next year or in the next 5 years. And so what you do right now is critical to protecting yourself. So what am I talking about? Well, here's what I was talking about previously, something called the volatility index. This is known as the VIX. And this measures volatility in the markets. And get this, since the year 2000, non-election years, the daily average during this period of time is 19.26. The max that we ever saw was 56.65, all right? During election years, are you ready? The daily average, this basically starts now, Tuesday. The daily average is 22.41, and the max, this is volatility now, 82.69. Wow, that's so huge. So that's just saying that volatility, again, statistically, according to this survey from Yahoo, it is coming. And what you can do to insulate your investments from market moving up and down is to know what can happen before it happens. How do you do that? We have something called a portfolio MRI. This is where we use a tool called nitrogen. We take a snapshot of your portfolio, each and every position in your IRA account. Say you have that particular income fund. You have out of your $2.5 million account, well, 10% of it, $250,000 in that account. You want to know what the risk level is on that account from 0 to 100. So that's the first thing you should do right now. I'll tell you in a minute how to do that. You should also set up retirement income layers that are protected from economic and market volatility and taxes in your future. So when you're living your lifestyle in the next 5 to 10 years, it doesn't go on the stock market roller coaster ride when you need that monthly consistent income. I'm talking about creating purposeful income buckets to help take care of your income needs. And don't wait in the hopes that the market's going to be higher just before or after the election in November, or that your chosen party will all of a sudden start lowering tax brackets just to help you, because the reality is you can't control the election outcome or what the market may or may not do, but you certainly can build your own retirement economy, I'll call it, that revolves around your lifestyle and what you want. Listen, if you need help, we can help you design and develop a strategy that can help you, if you want to, die with 10 cents in the bank. Seriously, do you know how much you can spend in retirement each and every month right now and not run out of money? Well, if you don't, then call me right now, because I can help you answer that question. Call me, 866-PROTECT. Get a checkup with a fiduciary, 866-PROTECT. Again, that number, 866-PROTECT. I'd love to give big thanks to my Protect Your Assets team for putting together a great show today. Executive producer, network manager, Kevin Renfer. Of course, all the fabulous producers back there, Phil, Dylan, Adrian, Lucas. Because without my team, I'm just another pretty voice on the radio. Thanks again, everybody. You've been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal legal or tax specialist and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.